Okay, guys, welcome to Smarter Options. Ice King here. All right, guys, today we're going to do a quick overview of MaxPain theory, what I've learned on it, what's adapted since then. I'm also going to talk to you guys about how I take some of my plays just so you can see. Okay, so to start with here, I go to this MaximumPain.com, maximum-pain.com. Just so you know, if you go to that site, okay, you start here, you go to options charts, okay, and that's where it comes up. So real quick, we're just going to cover what MaxPain theory is again. I know I've gone over it before, but MaxPain theory. So MaxPain is where, so who writes or who gives us options? Who's selling them to us, right? Well, somebody is. It's not you and me. It's not retail traders that are selling them. It's hedge funds. Okay. I sent to one of our other members the other day, just what the largest hedge fund was controlling, what their controlling assets were. The largest hedge fund controlling the assets, I believe, is $100 trillion worth. Believe that or not. There is an average currently of 39 million options traded per day. And MaxPain would be, so the hedge funds are writing these options. Every Friday, any option that's in the money, I mean, almost all, unless you're dumb, is getting exercised by somebody. And it's not us. We're selling them to somebody, right? And they buy them at a slight discount. You get something that's in the money. Somebody will buy it at if it's a retail trader that has it, they'll buy it at a slight discount and they'll exercise it. So they just bought 100 shares of stock at a slight discount. Or they'll sell 100 shares of stock at above price. Okay? But those are the ones who are exercising them. And the hedge funds have to make good on that. So every week they have to pay out. So let's real quick just go to, actually let's use Square because that's one of the plays we have open right now that's doing a little bit lower. So for 121 so far, there is 444,000 total open interest contracts. MaxPain stock price is at 133. MaxPain is at 185. Okay, here we can see all the open interest. Here we can see the volume from Friday. Okay. And then here we can see this nice chart. And this just shows what this is showing us right here is how much market makers are going to have to pay out based on the price of the stock. Okay. This shows you the option shade, implied volatility, open interest. I usually ignore this. That's not too much what I look at, but here's something I look at, the difference. So this is how much option makers have to pay out as it veers away from MaxPain. Okay, so MaxPain is 185. At 133, they're paying 50% more. Okay, so if it hits MaxPain, they're paying out 677 million. But where it's at, they'll have to pay out $1 billion. And that's with open interest as of right now. The open interest will ramp up more this week. Okay, but so there's a $300 million interest there to get it to go down. Now they're already hedged for this position. You notice how sometimes, they're hedging as the stock moves. Okay, where the stock's already at, they're hedged for. So, but as the stock moves, if it starts pulling further away, right, they hedge by buying. And so what it does is it kind of creates, and you'll see this sometimes, it'll create like a wall. You'll see how it just can't go any lower or it can't go any higher. And don't get me wrong, it can if there's enough volume. So know that, right? So they're going to pay out so much per 1% move of the stock. And it's based on how much open interest there is about how much, how much open interest, how much they have to pay is going to depend on how much they have to hedge. So whereas MaxPain doesn't give us this magic 8-ball number, it just tells us if the market makers are in our corner or not. Now, if something bad happens, they can absolutely be overcome. I mean, Square had a higher MaxPain this week, but there was enough bad sentiment, enough things going on in the market that the sell-off overcame how much open interest there was. Now, know this too, open interest on monthlies, there's a lot more open interest on monthlies. So like last week on Friday for Apple, I believe it was, there was 550,000 open interest on Apple for Friday of last week, which was a weekly. But if we look at the monthly here, there's 3.1 million. Okay, so their hedging on monthlies is a lot higher than it is on the weeklies. That's important to know. Okay, now but let's go look at Square. The other thing I'm going to talk to you guys right now too is called pinning. Volume pinning is where you look at these big spikes. These will act as support and resistances for the stock price. It really will. So here you had a lot of just a lot of volume coming at 140, and then a lot of puts coming at 130. And look at this. There was kind of the market semi started to agree at 135, and the stock ended at 133. Okay, pinning can help show you worst, and if it would have crawled up towards 140, this would have acted as a resistance that day. This would have acted as a support, because if it goes any lower than this, like I said, all this volume comes in. Market makers are hedging for this, and they're hedging for that new volume also. Okay, if we look at this, the biggest point of agreement right now for this options pinning, now this is of all expirations as it's come out, right? But it shows us that it thinks that the stock price is going to head up towards 165 next week, towards Friday at expiration. Okay, we can see that there's support at 145, resistance here up at 190, and lots of different points here where there's, but the biggest point where the market agrees at is 165 currently for next week. Okay, if we get any kind of a move like that next week, like I said, and then I always go look at trend lines. I don't use MaxPain, guys, just MaxPain. What I use is a combination of things. So let's go look at TradingView real quick. Okay, go to chart. Let's go down to Square. I've told you guys too, so I don't use a stop loss. I just want to make sure that things are still happening the way I want it to. Okay, so I had this drawn out. I took those, first started taking those calls up here. And I took that for a couple reasons. One is I thought if this is going to start reversing, this level might act as a support. Okay, you see it came down to there and it came up, but then it kept going lower and it hit the bottom of the trend line. But I do believe that was support now. So now what I would like to see is us move back up towards this top trend line. And as I just talked to you guys in chat, Square is notoriously, they don't do very good in January. It's usually a red January. However, for January 1st this year, or January 3rd, the first day of the market, right? The stock opened up, it opened right there at 162, is that right? 162.87 is where it opened. So all that's saying is that, it's notoriously normally red in January, is that we might, I don't think we'll get out of this before the end of January. I doubt we will. Or we'll come up and hit this point and bounce back down a little bit. That could be another thing too. We could break out of this trend, come back and touch for support before February. But then February, Square does notoriously good. It has like a 90% rate of closing higher from month start to month end. And if we can get a breakout of this trend pattern, we could see a break back up to start heading back up towards these EMAs. Okay. I mean, the reason that Square is doing so bad is they got a downgrade. I think this is part of why it's doing so bad. Besides it being January, they also got a downgrade from 325 to 225. The funny thing is that 133, that's still $100 below the downgrade. So yeah, I got downgraded from 300 to 225, but hell, we're still 225 is still way higher than we're at now. And I think the market will start grabbing that idea here coming up over the next month. So what I'll probably do is I'll probably on this low spot, I'll probably take some calls 6 weeks out also for a green February. All right. Now we're going to go back to maximum pain real quick. I also look at trading ticks. I look at seasonality charts. Okay, like I said, I don't use just MaxPain. What I use is I want to see, so I use trend lines, I use charting, and then I like to use MaxPain to make sure the market makers are in my corner, that they want it to move the same direction I do. Okay, that's what I'm looking for. Like I said, Apple this week has a 150 MaxPain. Last week was a 172.50, and you can see the stock price ended right around there. You could see that Apple kept trying to break higher. I mean, the market, us retailers, we wanted it to go higher, but market makers were hedging. I mean, it had a lot, 550,000 on Friday was a lot of open interest for even this. But next week, I said, is 3.1 million. So their hedging next week will be even more powerful than this week. All right. Another thing I wanted to talk to you guys about, so I did pinning. We talked about this. Oh, so MaxPain theory has been around for a long time. The more I look at it, the more videos you try and find out it. They all seem to be really old. And I think I have a theory of why. So I've sent this to Avir and a couple other members, but I looked up, I could find the statistics for the week of Thanksgiving, which would be, which was just how much volume there was in open interest contracts for that week. So for Thanksgiving in 2019, for that week, there were 58 million option contracts traded. Okay, in 2020, that same week, it went to 130 million. And in 2021, that hit 180 million. It's gone up 300% since in the last 3 years. It's gone up 3 times, right? I mean, from 60 million to 180 million. And now in 2021, there was a record average of 39 million options contracts traded per day average. That is insane. That number has gone up so much, but that explains to me why MaxPain theory works more now. I mean, their hedging has always been there, okay? But now they're hedging in quantities like they've never had to hedge before. And that amount of hedging is causing for bigger moves. So what I've noticed is they will hedge a certain direction, right? And the reason I buy calls a week later is it buys us a little bit more time. But what I've also noticed is, so just like I was showing you guys on Square. So Square, it looks like, this week they could be pushing it up towards that top trend line. And then it'll break out, right? Well, once it breaks out, the rest of the market sees that. And when the rest of the market sees that, well, now we all agree it's in an uptrend. So it will keep going the next week. Now, even if MaxPain is lower, they'll start fighting that move. But the initial move, and I think this is why sometimes we see like swings haven't been working, where swings get burnt out halfway through. I think this is why, or this explains a big part of why, is because their hedging is so massive now. They've helped that breakout happen because they needed it to, or because their hedging pushed it that way. But then as soon as the breakout starts and it keeps going, well, now it's getting outside the next week's max range, the open interest, and they start fighting the move early. And it's not really, like I said, it's not, don't think of it as they want the price to be there. I always say that, oh, they want it higher. It's not that they want it higher. It's just that their way they hedge will make it go higher or go lower. And so like with Apple, right? That 1 week last month on the monthly where it just couldn't get above 180, its MaxPain was at 165. And the amount of hedging they were doing that day, Trading Ticks will show you how much they have to hedge by. Trading Ticks was showing it was like 1.4 billion per 1% it would go up. Now, like I said, it has to go up 1% for them to spend that. So it's not like they just keep pushing it lower. It's just, it has to keep hitting that level, keep hitting that level, keep hitting that level. And as it does, it's wearing out the buyers. And then eventually there's not enough buyers left and the sellers take over and they start moving the stock down. And then as it goes down, they're hedging the other way. So they were shorting up here at 180. And then as it starts to fall, they'll continue shorting. But then if it goes too far below where they want it to go, well, then they start buying back their shorts. They're winning on both sides. I mean, hell, they're shorting up high, making it go lower, wearing out the buyers. And then as it falls and it goes below where they want to go, they have to buy back their shorts. I mean, they're making so much money. You should see how much the top hedge funds have gone up. I mean, some of them are up like their percentage of holdings are up 20% over the last year, which is crazy. I mean, they are just making money hand over fist. It's nuts. So guys, I hope, here, so this is Apple again. I told you guys, so here it ended at 173. If we used pinning for this, we can see 170 and 172.50. Okay. So this was going to act as a resistance, as a support, but you can see it got to 173, 173.27. Next resistance would have been 180. Next support under, if it would have fallen below 170, was 165. But that is volume pinning. Volume pinning is good for the day. It'll show you where support and resistances are if you're going to day trade. Whereas this will show you more close to expiration where the market thinks it's going to go by the next week. Like I said, the biggest point of commonality here for next week 170 to 160, so 165 maybe. You can see here that this is where the most absolutely agreed, but there's a lot of discrepancy. I mean, a lot of people are trying to think it's going to go up higher next week, even more than 160. People think it's going to go down below 170, but we just have to watch. Like I said, so this is what I'm watching. Just to give you guys an example. Another thing with MaxPain I want you guys to know is you can't look at every week in a matter. So like here, there's 3.1 million. Look at next week. Next week, there's only 200,000. That will be up to 500 plus thousand by the Friday of that expiration. So this number can absolutely change by then. Okay. Same with 2.4. Look, there's even less. There's only 85,000 open contracts. So this doesn't mean as much yet. Okay, because if Apple starts to fall, a lot more puts are going to come in, or if it starts to go up, a lot more calls are going to come in, and that's going to change the MaxPain level for this week. It's really only relevant for the week you're looking at, or maybe a monthly. I mean, so here in 2.4, there's 85,000, but if we go to 18, which is a monthly, there's already 656,000. Okay, so you can start watching the monthlies, and you can start watching this week's MaxPain, but beyond that, it's really kind of worthless. You guys have any questions? I have the comments open. If you guys want to see anything or talk about anything. But guys, this is some of the stuff I look for. Like I said, I also use trading ticks. I look at 3 or 4 different metrics each call I take. I look at some dark pool data once in a while to see what dark pool's thinking. I look at seasonality charts, see where it is seasonality. I'm a chart trader, so I look at charts. But like I said, I don't use just MaxPain, but I have stopped taking things unless MaxPain agrees with me. And I think that's why my winning ratio has gone up so high, because I now make sure that market makers are in my corner for the move of what I'm taking. So like I said, it's not to say that move can't be overcome. It just means that they're hedging in the direction. I mean, I just know I have a certain amount of buying power on my side for pushing the stock the way I want it to go. But like I said, if something bad happens, say some news comes out, a downgrade, the market can absolutely overcome that. Let's just look at trading ticks real quick. I'm going to give you guys an example. We're going to go look at Tesla real quick, okay? And I just want to show you guys this. Oh, not that one. Hang on. Okay, I just want to put this in perspective. Zoom, here's a good one. Actually, we'll just look at Zoom. Zoom's up. Okay, first of all, the algo thinks it's going to go higher. Let's look at the 5-minute algo because I have calls for this. That algo thinks it's going to go higher. Let's look at the 15-minute. This algo on the 15-minute thinks it's at where it should be. So sometime in the next 5 days, they expect it to be going up a little bit. Okay, that's fine. Look at the amount they're hedging. So if it's down, that means that they're helping the move. If it's going up, it means that they're fighting the move. But so every 1% it was moving, they were hedging with $8 million. Okay. But there was 3 million shares traded that day. Only that $8 million was only accounted for because of how much the stock moved, only accounted for 51% or 51,000 shares. Okay. So it's not to say that that volume can't be overcome. It just means I know I had 51,000 shares either on my side or against me. Okay. Look at Tesla. Like I said, guys, this is where MaxPain theory is not a magic 8-ball. Don't go off everything off of MaxPain. MaxPain just helps you know if the market makers are in our corner or not. But you have to look at some other things too. So don't blindly take things off of MaxPain. You'll lose. Okay. But here, every 1% of the move, they were shorting. They were fighting the move, or no, they were going with the move. So down means they're going with the move. But $410 million. Okay. Well, there was 24 million shares traded. That's only 390,000 of them. That's really not that much compared to how many shares were traded. However, you did have 390,000 shares go being pushed your direction or against you based on what you were trading. So that's where I keep saying to you guys, it's like MaxPain doesn't tell us. I mean, the stock does not have to end near the MaxPain. It just helps us decide if the market makers are pushing it the way we want it to or not. But there's other factors because it can totally be overcome. Let's just go look at where Tesla. Where did Tesla end at the other day? I don't know where the MaxPain was at on Friday, to be honest. I don't have my list in front of me. But it doesn't really matter. I guess it ended up here, 1,049 about where it closed. Okay. And they were, so I'm going to guess, I don't know if that was green or not, but whatever way it was, according to trade ticks here, they were helping push the move that direction. I've talked to Trading Ticks. The guy that developed Trading Ticks is very nice. He responds on Discord within 24 hours. I've talked to him about his MaxPain levels. So he had MaxPain at 1100. He said that he would recommend using maximum dash pain because he said that he ignores small flow, which can skew his numbers sometimes. And he said he might change that in the future, but so here's 114. He also doesn't put the year, so you got to be careful because 119 is not an expiration this year. Okay, 119 is an expiration for 119 would be an expiration for 2023, maybe. No, 120 is 2023. 119 is 2024. So yeah, that's for 2024. So you got to look at, so 121 is this week. So he also has MaxPain at 800 or at 130. That's wrong. I mean, the real maximum pain for Tesla for this week, that he's ignoring small flow. He's only looking at really large amounts. But the Tesla MaxPain this week, and we've been watching it, it's been going up. So it was at 650 last week. Every day it's been going up $10 to $20. It was at 790 on Thursday, and at 8 on Friday morning it was 810. And the volume from Friday doesn't get, so volume does not necessarily mean new contracts. This is just where stuff is traded. This could be stuff that was already open, or this could be new contracts. Open interest is only updated every morning in pre-market. Okay, so this will get wiped clean every morning. Open interest gets, and then whatever was new here gets added to open interest. Okay, so this number could very well change on Tuesday, or so it'll be Tuesday. So this could change on Tuesday morning because Monday is Martin Luther King Day. All right, guys. Hope you enjoyed this. Hope that helped you learn. Like I said, don't take anything off of just MaxPain. It just helps you know if they're helping move it your direction or not. Once like I told Avir, on low volume days, that's what creates all this chop too. Because on low volume days, you can look at the MaxPain and you can see where they want it. And just know, like I said, even if the stock price is currently higher, they're hedged for that position already. It has to move for them to change their hedge. Okay, now they're going to hedge it toward this direction. So if the stock price starts going up, they're most likely going to be fighting that move. Okay, I mean, and by fighting it, I mean they're just going to be shorting it as it goes up. If it goes down, they're going to short with it to help push it that direction. But it only works with every 1% move. So on a day where there's low volume, right, this thing will just get bounced around because they only do it with every 1% move. So if it starts going up, they short it, goes down, the buyers buy it, and it just gets this real choppy across, but it doesn't really do anything. And it just burns premium all damn day. And that's what sucks. So know that also. Like I said, the stock has to move on those low volume days. When I tell you guys there's low volume, nothing major is going to happen today. That's why. Because it's just choppy back and forth. It can't go anywhere. There's not enough volume to get past their hedging abilities. And, the market might want to go up, but they're just wearing it out and just doesn't move. Just choppy. We need volume and we need some big moves to make things happen. All right, guys, if you have any questions, you can always hit me up, DM me. I'm always available for you guys. I'll be doing another video here shortly. I'll just post it, but it'll be on the sign up for the C2 process. And that'll be coming next. So we'll talk to you guys later. I'll be available in chat.